The Central Bank of Nigeria has commenced the plan to wean deposit money banks, or DMBs, off the historical risk and cost of cash management. The Apex Bank experts and industry players are worried over the rising cost and risk of cash handling. And this has led to an interesting mix of policies aimed at advancing the cause of cashless transactions, with current and former central bankers admitting the system must find a way to reduce the cost and the risk. There have been challenges accessing cash at ATMs, with the situation degenerating into a crisis during the recent Yuletide, and banks have become increasingly worried about the risk posed to cash in transit. It's been reported that the banks are shying away from the responsibility of cash management owing to the rising risk, which is leading to them under-servicing cash points, including ATMs, and creating hurdles across the counter withdrawals included. And what we've also found is that in remote communities and even within the metropolis, ATMs are deactivated at night as deliberate protective measures for the banks. Today, the focus is on the Central Bank of Nigeria's new guidelines on cash management. This is Business Edge. I'm Tolulokwe Adeleru Balogun. Joining me is Mukhtar Mohammed, financial analyst and the CEO of Asher Dynamic Solutions. Mukhtar, welcome again to Business Edge. Thank you so much for joining me.
My pleasure too, and always a pleasure.
So I'm sure it sounds interesting to a number of people to hear that banks are concerned with the risk and the cost associated with cash handling, because it's what we do. It's what they do. It's what we know banks to do. They handle cash, they give me my cash, they take my cash. But it's simply not as simple as that. So what cost are we talking about here? What risk are we also talking about here that Nigerian banks seem to be shying away from?
Well, when it comes to cost, it has two ways. It has the management of the cash. So sometimes you have this bad cash, you take it to the bank and they have to replace it. That is cost them something take this Naira note back to CBN, and those are some of the cash. Those are one area of the challenge that they have in terms of cost of managing of cash. Then secondly, again, you don't forget the manpower side of it, where they have to employ cash officers who's virtually just collecting money, and they have to pay them for that. And most of those cash officers, if you go to the banks, are mostly temporary staff also, but even with that, a lot of cost that is going into that also, and being commensurate with the kind of returns that they want to get from, in terms of cost, looking into commensurate of returns. They want to use that. And the other one that's the most important one is the risks involved in it, which is very, very risky. Like you said, in the night, they have to trip up the ATM machine, not because there's no cash there, but because of security concerns. If these machines can be robbed, or people that are coming here to get cash also are robbed. So those are security challenges. And I think maybe that's why they want to get their hands off that. And remember that we're working towards a cashless society, which is very, very important, which is the primary aim of every bank all over the world. They're beginning to look at cashless society. I think for me, that's what the bank is looking at. They want to really go hands in cashless society, especially to be getting that income, that non-banking income from those space. That has really helped them. If you look at some of the balance sheets that came out during their results, you realize that they make a lot of they made a lot of profit in the area of the digital platform. So they are trying to improve on that, and that reduced cost is also there. Comparing to when you compare the digital platform, how much they bring to the bank, and what they call the analog platform, which you believe just as cash, they realize it's better to stay more in the digital platform than in the analog platform.
Okay, so let's talk about this cashless policy. It's been a number of years now, and it started with the pilot project, or pilot phase rather, with Lagos in January of 2012. And then it took effect in Rivers, Anambra, Abia, Kano, Ogun, and the Federal Capital Territory in July of 2013. The policy was implemented nationwide in July 2014. So we're almost 8 years down the line from a nationwide policy on cashless transactions or a cashless society, and we're running into these problems now. And Nigerian banks are complaining about cash handling and management. So one of the aims of the cashless policy was to reduce the high risk of using cash as well as the high cost of cash. But we're here 8 years later after a nationwide policy was implemented. What does that say about the policy itself then?
Tulu, I don't think there's anything wrong with the policy. Everything has to do with the Nigerian mentality of, we still believe that cash is power. Most Nigerians don't believe in just using their ATM card or going cashless, especially with the security challenges that they have seen it. And some of them always, sometimes you want to use this ATM platform, then that's a major challenge. The technical hitches that have to do with this ATM platform, especially for the person that goes to the supermarket, you buy something, slot your ATM, you have cash there, it's telling you cannot dispense cash, and the supermarket also need to collect their cash. But so some of them just want to say, like, let's have a little bit cash in our hands. And so that has not helped the cashless policy again. And again, if you remember that it's just like, oh, the fine you have to pay. Some of them look at what are the fines that I'll pay commensurate with me losing that money, losing that business, or losing that time. Sometimes some of them don't believe that it's better for me to pay this penalty and move on. So that is majorly the challenge with the cashless in terms of the infrastructure. It has not really worked very well until 2 years, or especially last year, the CBN started bringing penalty towards banks. Sometimes it takes them up to, there are some people up to now, sometimes it takes up to 6 months, 7 months. The bank have not been able to reverse some of their transaction or look into some of the challenges. So it's a big challenge, and so that's not giving people confidence in the banking sector.
Okay, and so you've answered my next question, which was why we continue to see a cash culture thriving in Nigeria. The cashless policy has not worked at the same scale nationwide. And of course, this issue with the technology as well. And then the experiences people have had. I'm one of those. I still have a referral, or rather a reversal, a refund that I've been waiting on since December. And we're now in March heading into April. So those are the kind of things that don't give people the confidence. And oftentimes when you do go to certain companies or you want to use POS, you find out that the network is dead, or you find out that the card that you have cannot work in the POS that they have. So there are still many issues, and which is why we continue to see Nigerians holding on to cash. So now, aside from some of the regulatory measures that the CBN has put in place to sort of push this cashless policy, what did the banks themselves do? What have the banks themselves done, rather, in order to discourage customers from making cash transactions? Have they been as effective or as, I guess, go-getting as they could have been also to help the CBN with this cashless policy?
I don't think they've done that like that. If you work, the banks also in their own little way, we say most of all this thing is tied down to the CBN. And again, I talk about the challenges that have to do with infrastructure and the cost of managing of this infrastructure. And then sometimes most of the costs of these things are fixed by CBN. Sometimes the banks will complain behind the scenes to tell you that most of the transactions does not even meet up with their costs. So it's a big challenge. Not that the bank don't want to do it, but they look at how much they invested in those, especially when it comes to the POS or the ATM terminals. But the bank actually like using their own internal platform that you need to do the transfer via your phone. And I think those ones are easy for them to maintain. Those ones to give them the income. And remember, before they used to make a lot of profit by then. Now the CBN came up with policy reducing those costs on those profits. Now, those days when you use other bank, after you do about 2 withdrawal, they thought they are going to charge you, but now CBN has made it mandatory that you can. So all those things are not encouraging the banks also to make sure that they have a fairly good big presence in the ATM and POS terminal. But what the banks are doing is that they try to develop their other online platform that has to do with the bank itself. Maybe you do your transaction bank to bank, and then from that bank you transfer by your phone. They tend to major more on that. You remember that the challenge they also have with the USSD that are coming from the telecom sector. Also, the Nigerian Competition Commission has to come in and see how they can resolve those issues. So those are part of the challenges that didn't encourage the bank to invest so much on this platform, especially in terms when they look at income to expenditure in those ATM platform. it did not help them at all.
All right, so before we get into the new guidelines and the solutions, because this banks actually did step back, and it's very obvious, especially when you leave a big metropolis like Lagos, so the banks have stepped back from cash handling, cash in transit. There was a gap that was created, and into this gap, we saw agent banking operators come in, and they're basically like human ATMs. You see them almost everywhere now, where you can go and get, you can use the POS to withdraw money or also to lodge. And when you leave cities like Lagos, you will find one of these operators before you find probably one ATM, or you maybe see 5 of them for every ATM you see. But it hasn't been a perfect solution. What has been the issue with this option as a stopgap measure?
I think, number one, it has to do with the Nigerian factor, because some of these money agents begin to deliberately, some of those banks that are close to those areas will not dispense cash. We're not giving cash so that they can be able to patronize these money agents. And so it has to do with the Nigerian factors. And some of them also, despite the nominal charge that they're supposed to charge, they want to charge individual by that. And again, you remember that if you look at it, for me, it was more introduced for low cash transactions, maybe 5,000, 10,000, 20,000. It didn't go more than that. But the one the CBN is proposing is in highly density commercial area, whereby there could be high cash transaction compared to this money agent. So sometimes I jokingly tell people that it's like you have the microfinance bank or the community bank are not like the money agent, and what you have to be the one that the CBN is proposing is going to be like the normal deposit money bank. So one is very bigger than the other, and kind of license are different licenses to operate.
All right, and we'll get into those licenses and the requirements after the break now. So the conversation is on the new guidelines that the CBN has introduced for the handling of cash in Nigeria. Deposit money banks have said that the risk and the cost associated with cash management are just too much. And so the CBN, along with the Bankers Committee, has a solution. We'll be talking about that right after the break. Still with me is Mukhtar Mohammed, financial analyst and the CEO of Astra Dynamic Solutions, and we're looking at the new guidelines released by the CBN on cash management for deposit money banks. Now, the Central Bank of Nigeria is introducing what it hopes will be solutions to the issues of risk and cost associated with cash management in the country. The CBN will set up bank-neutral cash hubs expected to help reduce the risk and the cost borne by banks, merchants, and huge cash handlers in the course of cash management activities. They also hope that these hubs will deepen financial inclusion and leverage on shared services to enhance cash management efficiency. Let me bring my guests back into the conversation. So looking at these bank-neutral cash hubs that are going to be coming up, Mukhtar, what do you think in terms of how it's being structured? What do you think of the idea itself?
Yeah, the idea is good. It's very good. It's trying to bring banking to our doorsteps into matter. They do even expect that the maximum transaction you can do is still 500,000, which is still giving credence to the cashless policies. But it's located, I think it's bringing banking to the doorstep, especially for Nigerians that have to do Nigerians, the worker, we call them the artisans, the laborers, or the people that normally will go to the market to buy things. So it's going to help them, because what we are seeing in this one was different, that it will be located in commercially highly density area. You're talking like areas like Lagos. When you talk about market like Idumota market, you talk about a market like the market in Show. Also, all those are the target points whereby people don't have to have cash, and these people will be the one to dispense cash. And the beauty about it is that it's more what we may cause. If you in the Pentecostal sector, you call it interdenomination, and that means it's open for every denomination. So for this one also it's not depending like the ATM. I must go to a bank, a particular bank ATM to withdraw at a certain amount. This one, each of those agents can do any transaction despite no matter the banks. So that makes it universally accepted. I mean, so that for me is also a good point that the CBN has made. And also remember that also don't forget that the banks are also permitted to also get this license also by getting them putting money, doing their own money hub agent also beside what they, the bank will always want to make something out of whatever transaction that has to do in bringing that something into their bringing income into the space. So they are still interested in doing that also. So it's not just it's going to be a snowball effect in the area of cost management risks. In terms of risks, I think I have my reservation, because again, if you're having those cashless, those cash points, then you need to spend a lot in terms of security, especially with the kind of security challenges that we're having in Nigeria at the moment.
Okay, so I want to take us back to something. The CBN says they expect this to help with financial inclusion, but these hubs are expected to be in areas that already have high commercial activities, which likely will leave out the rural areas. So where does the financial inclusion come in? Or is it because the agent banking operators will continue to be in play in these rural areas? How is this meant to really improve financial inclusion if they're still staying in the areas where you're likely to find a bank or an ATM anyway?
Yes, that's a very good question, and that's what we also were thinking. But again, like I said, you don't want to take the money agents out of it, and the money agents have a specific purpose, and this other money agent that can also have a specific purpose. Like I said, one must more or less operate like a community bank, while the other one operate like a national bank. So in terms of reaching out, and again, you need to also look at the fact that they don't want to throw away this money agent also. But I can assure you that over time, this cash point that they are going to establish will little by little take over the job of the money agent, especially when the banks are permitted to be involved in this business. So it could be another, especially to banks now that are forming holding companies. It could be another area whereby they can begin to see the holding company structure working in that area. And remember that banks are very innovative. Also, they might also begin to do innovative ways of people collecting their cash in some of these points. So it's all boiled down to it creates competitions with the money agent, but again, their rules are very different. The money agent is more or less to meet petty cash between 10,000, 20,000. Some of them are not even allowed to have more than 100,000 as their total deposit. But when you are looking at the current one, the one that the CBN is proposing, it's more or less you need to have up to like 5 million. I mean, it's 500,000 to 1 million as your deposit. So the difference are very clear there.
Okay, so let's talk about some of the requirements for those who will operate these hubs. So the regulatory manuals require that the promoters show evidence of working with the Nigeria Police Force as well as insurance cover as part of the requirement to secure their final approval. They will also provide security measures such as mini vaults, and prospective promoters are expected to hold banking or cash processing company licenses, and those who have demonstrated the capacity to shoulder the risk of cash and are licensed would take over the high volume cash operation needs of even some small banks. What do you make of these requirements?
I think the requirements are fairly very fair. I like the security aspect of it. I like that you have to work in connection with the Nigerian police. I think just for me, it's a good point. And then also, in terms of books, I know that there are some banks that actually have been hiring people to do their Vox transaction, moving cash from money. That's why I'm talking. Those are part of the cash costs that they want to get up their way. Some banks, if you see the billion banks who are working around, some of those billion banks that do not belong to the bank, they belong to private owners. So those are part of the costs that the bank is trying to reduce. I think for the guideline, I think they are very, very fair, especially in the area of security, but we need to be clear about why are you saying the deposit money bank should also be involved in it. If you are taking it away from them, why are you giving them
an opportunity
to be part of it? So for me, that is where I'm not clear about. If you are saying, no, we don't want to handle cash, then let it be that they are no more handling cash. Let this other high cash points begin to handle cash. But if you are saying that the banks, the commercial banks also have a right to bid to be some of these agents, then you are not creating a level playing field for everybody.
All right, so my final question is this, Mukhtar. Overall, this seems to be a good plan. Many people are happy with it, hoping to address the issues of cash management and then also the gap created. But the CBN has introduced different policies over the years with varying levels of success. How do you think this will play out? You know, we talked about the cashless policy earlier on. 8 years later, there's still a struggle. There's still issues. If I travel now to my village, I will take cash because I cannot be guaranteed that the ATM will work or that I'll be able to use it at the point in time I want to. So those are the considerations Nigerians continue to have that allows a cash culture to thrive. So what do you think about the potential of success for this particular policy? Do you think it'll work?
I think it will work if the regulator gets their act together. It's more or less about getting their act together. The major challenge in any policy that not worked is that the regulator seems to shy away from taking the tough decision. I think if this time they're able to take the tough decision to make sure that they meet up with the demand, they operate according to the guidelines that have been set for them, and they have constant monitoring of what's it. So when it comes to finance, it has to do about how much the regulators manage or monitor what is happening in the system, determine the success of that particular project. So for me, I think it's brought down to the management culture. I mean, the regulatory culture of the CBN, whether we will see sanction when they break the rule, not for us to begin to see some of these people begin to operate in tens or 20 of millions, because CBN have even said that you're not supposed to disperse cash, you're not supposed to be involved in investment, you're not supposed to be going trading, but we have seen them set up all these rules, and yet some people flag those rules until investors get their hand burned or Nigerian citizens get their money burned, then they will have to begin to compete. So for me, regulatory is going to be the key to see how it can get work.
All right, Mukhtar Mohammed, we will, of course, be watching. It's meant to kick off sometime soon, and there's still a number of issues or things that need to be clarified from the central bank, but many people are waiting to see how this plays out. Mukhtar, as always, thank you so much for joining me.
My pleasure to you. Have a pleasant day.
You too. And it is a policy that's meant to bridge the challenges that deposit money banks in Nigeria are having with the associated risk and cost of cash management, and also the gap that has therefore been created. Now, there are still more details that need to come out about the bank neutral cash hubs and their operational mode, but the CBN has said it will clarify all the details before this policy kicks off. So we'll be following this very closely. It has the potential to be a fantastic policy and address many issues, but as my guest has said, regulation at the end of the day could be the biggest issue. You're watching Business Edge. Up next is NC4 to watch. And while our focus for today's conversation has been Nigeria's central bank, it's still the first on the list of stories we're keeping our eyes on. The central bank on Monday announced its decision to keep benchmark rates unchanged a day earlier, with the governor saying that they had scheduled to avoid falling into limbo because several monetary policy committee members are retiring on Tuesday today. Governor Godwin Emefiele said the decision was to boost its fragile economy and counter potential headwinds from the Ukraine war, but that members felt the need to signal a tightening stance in order to curb inflation. Economists have poked holes in Kenya's Treasury's projection that budget deficit will drop by more than 300 billion Kenyan shillings ahead of a review on the debt ceiling, citing debt repayment pressures. The Kenyan Treasury Secretary, Ukur Yatani, sees the fiscal deficit falling below 700 billion Kenyan shillings in 2 years from the 1.03 trillion shillings, according to the midterm debt management strategy for 2022. Egypt's sovereign wealth fund has attracted more than $2 billion in investments, the government said in a statement on Monday. The fund was set up in 2019 with the aim of bringing in private investors to developing promising state assets. And finally, oil prices extended gains on Tuesday as some European Union members discussed a potential oil embargo on Russia, and attacks on Saudi facilities sent jitters throughout the market. Front-month WTI futures were up to $114.32 a barrel on NYMEX, and Brent futures were up to $118.80 a barrel on the Intercontinental Exchange. Both contracts had settled up more than 7% on Monday as the potential for more supply disruptions weighed on the markets. And those are the stories we're keeping our eyes on. As always, thank you so much for joining me. Follow us on social media at News Central TV. Download our mobile app, subscribe to our YouTube channel, and watch us on the platforms we are available. I'm Tolu Lokwe Adela Ribalogun. See you again soon.